Hello, welcome to Alpha Futures Trading again. A new episode tonight. Actually quite an interesting one here. You can see we're looking at the order book live as we speak, and I've been in this trade and being taken off and back in again. But effectively, my aim was to go for this. You can see here there's a limit, which you can see here 592, which is very large. And we've got liquidity attracts the market, attracts the pricing, as you can tell. This is not being pulled out or pulled off. So this is pretty much real accumulation of liquidity up here at that level. And that level has been here for a while, by the way. It's not just something which appeared out of nowhere. It's been here for a long time. And I'm talking about weeks. This is what I've noticed. Now, there's a couple of things could happen here. Initially, it will attract so it's a selling order, right? Selling or limit order. It will attract buyers to come all the way here. And if you need to execute liquidity, then that's a good place to. There is liquidity in there, so it's a good place to execute some sizable orders. So as you can tell, the market is going there. Now, two things could happen. When it gets, when the BDAS gets there, it could just pull out and let the market go up through it, or it could just simply accumulate. It could just consume the liquidity here, so that we would print overall. You can see here we're printing quite a bit of volume around here. So we've got a little volume spike here. But effectively here, we would see then within the volume profile at least 590 contracts. Some more contracts could be added. A portion of the contracts could be pulled off. All sorts of things could happen. Or it could just simply act as a gate. So meaning, prices would go all the way here, try to consume a little bit of this liquidity. But if there isn't enough market orders trying to consume the liquidity, we could well do a U-turn. And I'm quite glad actually to be filming this, because not only this is live, but aside from being a real live use case, but also it shows exactly what I was saying in the previous video, what makes price move, and explaining the functioning of the order book, the DOM, and how this relates to anything else that we look at when we look at the volume profile and the footprint, which is a video which didn't have that many views actually. So everybody knows how the market moves and works and all the things I mentioned, which is fantastic. Now, I'm just trying to keep filming this, see what happens. Again, it could be this 587, 5892 been consumed. So doesn't mean the price will necessarily go through it at full speed. Now you can see it's adding, there is some more being added. We're now at 808. It's getting larger and larger. And as I said, this could have two effects. Effect number one, this is all being consumed. Great. Bearing in mind there are algos who need to execute orders, and they will try to ping different levels of an order book to see where there is high pockets of liquidity or resting orders, and they would see that. So that's a possibility. But even though people, like as we're doing now with with our eyes, can see where this is huge, liquidity patch. So lots of selling orders, lots of sellers in there resting orders. So it's a good place to execute. Or it could be pulled out and prices would stream through, because we'd go from 800 to whatever this may be, 100 or 50 or 80 or whatever. Or the third option could just be that it's going to, spend some time there, consume part of it, and then just do a U-turn. Occasionally, before you even get there, you could see a U-turn and it reverses. but you know, it's never a guarantee. Yes, it's going to go through, or no, it's going to do a U-turn and it was going to act as a wall or as a gate, or you know, you don't effectively know. But here, I'm just getting. I mean, I was just having fun placing a micro order here, and as you can see, I'm being executed now on both both accounts, and that one as well have been executed. So anyways, let's see what happens now. That liquidity has increased, and it's quite interesting because this is really, you can see here you're seeing all being correlated. You can see this 103.25. There's no 103. It's slightly different here on the micro, but you can see liquidity 29.30. But obviously it's not exactly here. You've got the 10 and 15, 20, 25. You don't have that with a micro. It's more 20, 21, 22, 23. So the levels are, although they both are correlated, the mini and the micro contracts are correlated. They're not exactly got the same pricing scale here. So anyways, what's interesting is to see what happens here. So you can see here, liquidity has been pulled out. We were for that period of time 800. Now we're back to 600. And really, I think it's, if anything, super interesting because we're seeing what it does here. And by the way, you can see now the difference. And don't worry about the level itself, but you can see the difference just between seeing actual market orders being printed, and here, instead of seeing market orders, you see the circles which represent the market orders, the buyers and sellers, and then you're seeing that liquidity, who's at the moment is pretty much acting as a thick wall. As you can tell, there hasn't been any large orders to go and consume the liquidity and go through it. But let's see what happens. It's quite interesting. I mean, if we look at a market profile here as well, and the volume profile, you can see that it's pretty much been working on this low volume node, as mentioned in the first video which I've done, and some of it yesterday, actually explaining how low volume nodes get filled in and volume is being transacted, and very often the market revisit them and fill them in. And we could well go to the top here, which corresponds to the point of control as well. But anyway, that gives you a sense of where we are within the profile. But will there be enough buyers to really consume that pocket of liquidity and go through it, or not? Okay. At the moment, I think it's clear that it's acting as a wall, which was one of the three options that we had, right? But let's see. Let's see. Just going to pause a little bit, and I'll resume when we go back, because otherwise it's going to be boring to watch, and it's going to become a very, very long video. So I'm resuming, guys. We're still on the same sort of...
Trade 6F5 CME at Rhythmic by price 1.0324.
There we
Size
go.
157.0.
So you can see here...
Trade 6F5 CME at Rhythmic by price 1.0325.
That aggregates, by the way,
size
all the trades.
140.0.
Okay? So there's a bunch of trades which came here, consume all the liquidity. You can see this volume has been printed here at 0325. And it's, if you're looking at here, it's a succession of orders, but they came exactly at the same time. All right, so we had pretty much, we had this 0807, we had an 80, aggregated position. There was one position of 80, one of 50, one and 140, and then another one at 66. That's probably the same, very likely the same provider, broken down a larger order in several bits. And the last one has been executed because that's been all consumed the liquidity at 0325. The last part has been executed at 32 at 0326, because obviously, as mentioned in the previous video, when you consume all the liquidity in one price level, then you move to the next one. And if we were to calculate all those positions, the 64, the 66, the 140, the 50, and the 80, which is just down below, we get to 400. So that's very, very likely. All of this, same provider, broken down a 400 buying order in several slices, several parts. And they try to, maybe it's an algo spreading the quantities so it doesn't move the price too much. And the average price is better than if you move the price and sends it to 4 or 5 price levels. But this is a perfect illustration of what happens, how price moved. This was extreme because we could see that large resting order, or orders, shall we say. It's not just one order, but resting orders on one same level. And yeah, look, it's something which was very interesting to look at. And of course, here there's always the possibility with to go back, which is one of the great thing about Bookmap, is that you can always go back to it when, if you look at a classic, shall we say, order book, you can't. To cut the long story short. So there you go. A very, very good illustration of what makes the price move and the relationship between the limit and the market orders. Now, in some occasions, market could pick up and carry on going up, or reverse. Again, the rest is more down to this execution by price, and the volume at price, and then the TPO, the market profile. And you can see we're very much at the top of the day here, high of the day. We've reached that point of control of one of the previous sessions, as we mentioned, and of course you could start going up again, or fill a bit in reverse and create a little bit more volume here to fill in the low volume node that we had on that day and which we projected forward. So again, that's illustration of why we put this and send it forward. We draw this, and put it forward, so that it can act as a point of reference and a point of interest in the future. So just to finish on this, I wanted to get back to the volume profile. And again, now that we understand very well the relationship between those market orders and those limit orders, however we want to choose to visualize them, a good way to, as I mentioned in the previous video, the good way to look at it is to look at volume at price side by side with the TPO market profile. Now, as I mentioned, I don't really personally use all the market profile concepts in itself. You can look into that. One guy called Jim Dalton is pretty much the very, very experienced in that, and he has many videos and courses and material out there where he explains it in detail how he uses it. It can be complex. It can also be, some people say that it's a little bit of a, you know, an old concept, but it could be however old you may want. It still works. I mean, the way the market works is the same. It has been the same forever. However, like in any sort of a solution, any strategy or anything specific, you may want to make it yours and keep what you feel is useful and the way you understand it and how you can use it and so on. So what I look at when I look at personally market profile is what we call unfinished business, and that's those pink lines projected forward that you can see. And without going into the details of it now, because it deserves a whole explanation, it's when you have at a, one of the tails, so buying tail or selling tail, you would see two prints. You can see we've got two letters here, an O and P. That's unfinished business. And I'll go back into this in details in another video, another session, but effectively this projected forward is very often, as the name indicates, unfinished auction, which will be a magnet, act as a magnet, and will be a point of interest, and market will often go back to it. Okay, so that's one of the concepts that I look at. And you can see there was one here from last week has been projected. You can see we're here now 103.37. I wouldn't be surprised if we revisited 103.50. Again, I think the caveat here is, and as it is with any other sort of order flow concepts, is that while it works reasonably well, you don't know when. Now it would appear and seem that it could be a short destination to be revisiting. It doesn't seem too far away, but it could also equally go back down and revisit this in 2 weeks' time. I don't think it's going to be the case, but it could. All right, and I think really the idea is not only you look at one thing, but it's look at volume profile, look at market profile, compare them side by side, use the different magnets that they create in the areas of unfinished auction or single prints or buying tails or selling tails or low volume node or high volume nodes and point of controls, and project them forward and get back to them and look at it. In addition to the live order book, in addition, looking at what we looked at earlier in the video, in addition to look at the footprint, in addition to look at where liquidity is, and it's a whole confluence of confirmations that are going to at least make me make a certain decision. Bearing in mind, even once I take those decisions, I always have two scenarios. A scenario that if I go long now, I could be wrong. And if I'm wrong, when am I wrong? When do I decide that I'm wrong? So, and if I'm not, if I'm right, up to what point am I right? So now if I take a long here, market order, and we're aiming for the unfinished auction that we have up here, which is 103.50, which is effectively, it's not going to be exactly 103.50 on this one, because as we mentioned, it's a different scale. But anyway, the point being, am I going to stop once the market is here on 103.50 on the 60 on the full contract? Am I going to get out? Is that going to be the target, or is the target somewhere else? And if it doesn't, if it reverses, when do I get it wrong? When do I exit the trade? And that's using the DOM, using the fundamentals, using the footprint, using all of the things that I've been mentioning that I personally use to, to confirm if a trade is validated or not. Now, one way to look at it here could be You see here we've got this top of the profile on a session Tuesday last week, and we've got a low volume area here, low volume node. I mean, the whole top is very ugly, really. It's a single. We've got a B distribution here, right? And here we had this. In terms of the TPO, in terms of volume profile, we own two sort of low, LV and low volume nodes, which have projected forward. We never went there last time. Actually, the following sequence. The following sequence, we had other thing that we look at is market structure on different days. So we had an inside day. So the inside day, we broke it the following session on the downside. And as we broke it on the downside, you can see we definitely went below a number of the previous sessions, went into some low volume nodes, which I had projected forward in the past without getting back to it. We didn't fill them in completely because the auction changed and went back up at some point, and then we went back up. So again, will this part be, fill in, revisited? Absolutely. I just don't know when. And same here. Could the target be initially this 103.50 and then looking to fill in some of this low volume node or all of it? Why not? Above that, you can see another unfinished auction over here. So that could be another target, 103.86 and so on. Okay. I think we all get the gist here. Another thing I look at is going to be so you're looking at the type of data we're in. So far, we're in a bell distribution. So, we got to the bottom, went back up, and, the buyers were kicked in. And will that happen again? Will it be? Because some days you have, here was not quite the case here because we had this gap here. But, sometimes you got bell-ish distributions. You buy at the bottom and sell at the top and so on. And that's what it does all day. Which could do, or are we going to have a, single, double, triple distribution? Is something specific going to happen today? If you look at the fundamental news or the economic news that we're expecting, we've got nothing until 1:30. We've got the inflation rate, US, year on year, month on month, the core inflation rate, which invariably makes the market move. Okay, so sort of aiming initially for the 103.50, and then we'll see what happens pretty much. And this is always the case. You can try to sort of plan and establish different scenarios, but to some degree as well, the point of the order flow is to look at the flow of orders as they unfold, as they happen. So this is something that we definitely are looking at here. Another thing I look at is the single print in the middle of a profile. I'm trying to give you a good example here. And again, that's a yellow line on the TPO market profile, which I project. You can see here, one here, it's called TPO print. So TPO print, I don't know where this one comes from, but it's going to be something I send forward. It is going to act as a magnet. Initially, when it gets revisited, I wouldn't make a rule out of it. Again, that's a TPO market profile concept, but initially it acts as a magnet and then it gets rejected when it gets revisited. So it's a point of rejection, but very often the market goes back to it. So it comes back, it comes to here. If you look at it here, we've got the middle of a profile. This I've called a TPO print, but it's a single print, really. Here, you can see we've got a single print all the way here, right? And the top of this single print is here, and the bottom was here. So, we that's something I expect to be revisited, and hence why I projected forward in time. Anyway, that's where we are so far. I'll try to pause for a little bit and see if we have reached that sort of initial target. See where we are, but that's pretty much how I use more subtleties as well. But this combination of the type of days that we have, confluence, single prints, buying tails, selling tails, point of volume control, point of TPO control, unfinished business, unfinished auctions, single prints, etc., etc. And look as well as the open at the close, in comparison, the open comparison to the previous close and so on. So basically, that's what I look at when I look at the volume profile and the market profile.